Hey everybody, today is Friday, the 2nd of February, 2024. Hope you had a good week in the market. Markets were higher for the most part, with the exception of the Russell 2000, which continues to be a dog, down pi. And you can see the biotechs are also weaker, and the energy names lost some ground. Oil really lost the big amount there, and we'll talk about that shortly. The S&P 500, if you tuned in on Wednesday, I said we're guilty till proven innocent because we were below the declining 5-day moving average, and I don't buy dips. And I didn't buy the dip. I bought strength after the dip, because when we're guilty until proven innocent, what makes us innocent is when we get back above the 5-day moving average and break that pattern of lower highs and lower lows. So buyers regain control. Here's what we were looking at Alphatrends. This is something that I had posted to Alphatrends early this morning. I've put it on Twitter a number of times over the years, and that is when you see a market below a declining 5-day moving average that gets some real strength there first thing in the morning with a gap higher, especially after it's just seen a shakeout, then it gaps up, and we then look to the shorter term time frame. We don't chase that initial gap. Instead, we wait for it to get back above the volume weighted average price and then purchase there. Let's see how that played out in the S&P 500. Was right here. It meant buying right at this point with a stop below the low of the day. Now, I didn't do that in the S&P. I did that in the Nasdaq, because here we had that declining 5-day moving average. We had trapped the short sellers in here the last couple days, and the buyers immediately gained control first thing in the morning. Let's just open that up so we can see it a little bit better. So you set the anchor right to the first minute of the day. When the buyers regain control back up above that anchor point, and this is just 4 minutes into the day, that's where I purchased it, set my stop under here, and I sold some on the way up and am still holding some. That's innocent till proven guilty. The primary trend. Also on Wednesday, I saw a number of people were wondering, well, if we're below the declining 5-day moving average, why don't you short the market? And the reason I don't short the market when we're below the declining 5-day moving average is simply because we have a longer term uptrend. We have higher highs and higher lows on the daily time frame, and that means it's innocent until proven guilty. And news and surprises tend to follow the direction of the trend. The trend is clearly higher here, and this is where we are now, with the buyers clearly back in control of the Nasdaq. And next week we're going to want to see this level hold. That purple anchor is from the Federal Reserve meeting, by the way. That's the week to date. And the orange is the 5-day moving average. Ideally, we get some pullback in here. What I would look to do is reload at some place like this, and then set my stop, raise my stop up under this conjunction of the 5-day moving average and those two important anchors. Going back to the S&P, if we saw such a pullback, let's erase all that stuff. I'd like to see it come down maybe to this prior peak. That will get that 5-day moving average, this anchor, and that anchor up there as well. And then perhaps it continues to move higher. Otherwise, it falters and falls apart, and that's what stops are for. The Russell 2000, again, it's still really kind of neutral. I mean, it's down 4%, as I said, or what was it, 3.14. It's down pi for the year. So when we look at that, it's, we don't want to be involved in the Russell 2000. It is likely building energy for continuation to the upside. That's what it looks like on the weekly time frame. But right now, there's just been no advantage. We're still digesting this much bigger rally. We've seen 2-3 tests now of the rising 50-day moving average, and it's holding in there so far. But that doesn't mean we want to be a buyer. I don't want to be a buyer when the 5-day moving average is declining. I want to see the buyers regain control. I didn't mean to draw with that. Regain control, maybe do this, the 5-day moving average flattens out, then perhaps next week the Russell 2000 could be the market that leads the way. But for right now, it still remains in a void. The semiconductors, they've been the strongest group all year. I had pointed out maybe this is a fifth wave, and perhaps it still is, but the buyers regained control as it got back above that 5-day moving average. Now if it pulls back in here, well, we want to be a buyer at this point or avoid it if it continues to move lower. This is an important level for early next week, is 188. The biotechs, this big mess that I drew in here, this is just showing you how volatile these biotechs are, that you've got to be really willing to take a lot of risk if you're going to get involved in those. And you certainly don't want to buy these breakouts like this right here. We're still consolidating on the daily time frame. Overall, it's still healthy. It still looks like it has room to run on the weekly time frame. But as far as timing goes into it, this isn't the place to be a buyer. Let's talk real quickly also about oil. That's a lot of people gave me favorable comments about that. So oil, last week I had noted that we were right up against the anchor from this peak here from last September. Let's just move that up so you can see that. That's actually that was that September high there, and this prior support acted as resistance. I was saying we don't want to be a buyer of oil or oil related stocks because the market had just run. We ask ourselves, where has it come from? It rallied from 70 to 78, 12%. Where did it have the potential to go before it was likely to encounter supply? Right at that anchor point and this prior band of support, which had been resistance, and it fell just like it was supposed to. The thing is, it's not finding any buyers at the year-to-date anchor. That's why we call it a level of interest. It's not finding buyers at the low from December either. So oil is in a downtrend. Avoid it. Bitcoin, we've seen this bounce from this anchor, and now we're still fighting with the year-to-date anchor. And it looks bullish to me. I'm still looking at it as a long candidate, and I'm still long some Ethereum as well. So let's go back to equities because that's where I put most of my speculative money or trading money. Financial stocks continue to behave well. I don't own them. I don't like them. I don't feel like talking about them. Energy names, they could potentially be getting ready to turn is what I'm drawing in here. But again, they're right at that anchor from last year. They have the anchor from the high here, also overhead. It's got a declining 50-day moving average, declining 20-day moving average. I just don't see any reason to be involved. If it does something like this, hopefully it will find buyers in here. Otherwise, I think that if it does this and bounces from it, then breaks down, then energy names could be in for a world of hurt. Meta is obviously what helped drive this market higher here today with its big gap up and continuation. Same with Amazon. There's still a lot of great looking setups out there, and I hope you're taking advantage of them.